There are two sort of subset patterns that I'd like to bring to you guys' attention, one of which relates to the 4 primary trade setups and one of which does not. So this is actually a good time for me to bring up the chart gallery as well. And for anyone who's not familiar with the chart gallery, I'll go ahead and move this onto the screen. This is something to which you have access that is literally about 800, near 1,000 chart examples that I've captured over the last, quite a few years. In here, you'll notice that we've tagged a lot of the charts, not only with the ticker and the time of day and the trade type. We've also included a couple other patterns that we're trying to identify or more consistently follow. So one of which is called the single helix pattern. You guys have probably heard me refer to this if you've been in the chat room or if you've talked to me before. It's definitely a pattern that I'm a fan of because it's something, I don't know how to describe it. It looks and feels very organic. Something about the way or the strength in which this variant of a flag breaks down or breaks out really excites me because it's a consistent and strong trend move. So the nature of a single helix pattern, let me get the right color here so I can draw over top of this. It comes in 3 effective stages. There's the first stage, which is near vertical descent. The second stage, which is a with trend consolidation. When I say with trend, I mean it's moving in the direction that the VWAP is moving throughout the day, the primary definition of trend. And then the third stage is another near vertical drop in this case, right? It can be obviously to the upside, a near vertical move upward. The reason I kind of divide this into 3 stages is because there's no way for us to identify the single helix pattern during the first stage. That just looks like a normal, strong sell-off. But you may have noticed that a minute ago I referred to this as a variant or a type of a flag. So let's draw, for example, and this is kind of just me using the blank space on the screen as an example of this. Let's draw a variant of a flag that retreats up into nearly a majority of the move down. So the initial sort of flagpole down, there's upward consolidation against the trend before it resumes and goes lower. The next variant of a flag would be the same thing, except more sideways behavior. So instead of fighting back up into the vulnerable space of the flagpole, the initial burst of movement, this one just goes sideways, whereas the stronger variant is still tilted to the upside. And that brings us to the single helix pattern, which is what I'm referring to here using this example from NVIDIA a couple years ago. We get the move down, and then there's downward consolidation before another significant move breaks in that direction. So notice that all 3 of these could be construed as flags that have some consolidation after a significant move in a direction. The difference is that the single helix is moving so strongly in the direction of trend. There's just no reason, or excuse me, there's no time for it to fight back against the trend. It's too busy going in the direction of trend, even when it's consolidating. So the nature of a single helix pattern, let me actually clear some of this off and I'll draw it a little more, as I said, organically. It has this sweeping S-like shape to it. I don't know if I really should have said S, but I think you guys get what I mean by that. There's a, and it's obviously named because if we were to, let me do this in a different color, if we were to draw a separate pattern of the opposite direction, that would create a kind of double helix-like structure. So I call it a single helix, because I'm not a scientist. I'm sure there's a better way of describing this, or there's a proper mathematical term for this. But it has that very organic mathematic curvature to it. And like I said, we can't necessarily identify the trade when it's initially selling off. So our best bet is to get aboard the trade somewhere in the middle of the structure, in that kind of second stage before the big push lower. The challenge is, how are we going to detect that it's continuing to make lower highs, it's respecting the deviation band, and eventually threatening to make a new low? And that goes back to these three types of flags. Are we moving against the trend during consolidation? Are we moving sideways and digesting the trend? Or are we kind of continuing the trend lower even when we're supposed to be consolidating? That's the nature of a single helix pattern. I bring that up just because we're going to see a lot of this, forgive me for overusing this term, but organic curvature and kind of fitting to the deviation bands throughout our intraday VWAP examples and going forward. So I want you to be prepared for this specific type of pattern when you get a strong sell-off remaining in the fast lane and making continuously lower lows. And like I said, the easy way to think about this is the strongest or weakest variant of a flag. Strong to the upside, weak if it's to the downside. Something that's going to move a lot, likely. And obviously there are many more examples than just the one we looked at here. I think I picked this NVIDIA one. Yep, same sort of thing here. Strong downward motion, starts to slant, but not consolidate, and then makes a second comparable push to the downside. You see how we're fitting aggressively to the deviation band on the way down, almost like a dynamic, really just dynamic resistance. I was going to say a benchmark or some framework or some lane divider. You guys remember the analogy of fast and slow lanes? This is guiding traffic pretty aggressively during that sell-off. Here's one more example before we move on. Wow, look at that. And obviously we haven't gotten to this discussion yet, but a nice launch off of the 5-day volume weighted average price to start this pattern. First stage, second stage, third stage. And it's not our job during the first stage. It is our job to try and identify this during the second stage and remain aligned with that directionality or that trend so that we don't give up on the trade or think that it's waning or fading, right? One of the other patterns that I do think we have tagged in here. So let me see how many examples. Really only one. I was going to say we haven't gotten around to tagging a lot of them with it, but something that we call the checkmark pattern. And when I refer to the checkmark pattern, this is just a special kind of setup or scenario for a type 3, typically long trade. Now, right here, I've got a 5-day, 1-minute chart of McDonald's in front of me, just from the latest 5 days. I'm using this because there are 2, 3, 4 examples that I see of the effective checkmark pattern in action. The nature of this pattern, and as I said, it's a type 3 long trade setup. So I'm going to go ahead and circle all of the areas on this chart that would effectively qualify for this event. So as we had said previously, a type 3 trade is a reversion up towards the volume weighted average price off of the -1 deviation band. Now, I also understand that I may be drawing shorter term targets than you might be taking. You might trade this up to the VWAP, and then as it breaks through, say to yourself, well, we're only midway through the day. This looks like it's really trying to fight into the top half of the chart. Maybe I should stay with this trade. You don't only have to hold it for a 1 deviation target, so please don't be misled by that. The nature of the checkmark pattern is quite simply that when we have a VWAP that's dropping and flattening out, and deviation bands that are doing the same, we expect to see a market that maybe breaks down, rejects at the deviation band, and then once it comes back up, and this is really crucial, into the slow lane for the first time after being in the fast lane for quite a while. There's an opportunity here. Let me draw in a different color. There's an opportunity here for a very powerful move to come off of the -1 deviation band. Notice that almost all of these charts draw in yet a different color still, have an initial sell-off, a reversion up near the VWAP, and then a setup. Sell-off, up near the VWAP, in fact, over the VWAP a bit, and then setup. Here's a small difference because we get the kind of sell-off and then barely a pop into the slow lane before the setup. But again here, very strong sell-off, reversion to VWAP, and then finding support at or near that -1 deviation band. So the story behind this pattern that I try to remember or think about whenever I'm observing this is that the market is, you'll hear me say this quite frequently, unwilling or unable to live in the fast lane. It wanted to stay in the slow lane. You remember me talking last time about how the fast lane tends to beget more trend movement, more magnetic repulsion away from the VWAP, rather than the slow lane, which breeds more counter-trend, magnetic attraction, reversion back to the VWAP. Now think about this too. This is a random chart from the last 5 days, and we've got 4 examples of this setup in action. It does tend to lean more to the long side. I think that's simply because people take profits in the morning, the market kind of stabilizes and recovers, and the consistent buying throughout the day brings it back up towards VWAP or even higher. The reason why I think this is a powerful setup is because, let me clear the drawings here, look at how closely it respects that deviation band. Here, not quite as much, there's a little bit of overthrow. It's exciting to see something that could exhibit such really low nominal risk required for us as traders, but still a pretty healthy opportunity at the very least for a 1 deviation move to the upside or significantly more. So something like this that offers support right at the rising +1 deviation band, if you had been in the trade, absolutely stay in that. We're starting to see slope. We picked a direction for the day. And this is very different than the type of environment we were seeing here, where we're contained within the deviation bands. We're not breaking out, we're not breaking down. The second half of the day, totally different, right? We've got slope on the VWAP, we're in the fast lane, we've picked one side of the VWAP that we belong on over the other, and a nice move to the upside. This could have been the most optimal entry because it balances minimal risk with still quite a bit of upside in the event the trade works out. We can't necessarily know that ahead of time, obviously, but we can continue to participate and kind of follow along with a winning trade once we are aboard. You know, one other interesting, this is not a pattern, this is just kind of a conceptual drawing I wanted to do, kind of sparked my interest when I saw this. You know, someone asked me, how do I think about the market? Do I just kind of ponder that there's a VWAP, we have our deviation bands, and then there's the slow and fast lane only. So here we'll draw our slow lane and then our fast lane beyond the 1 deviation. What I've found is that the market can do pretty much about 4 things with regard to VWAP. It can be oscillating around the VWAP. It can be oscillating within the slow lane. It can be crossing or threatening to cross the deviation band, or it can be above in the fast lane. Now, I know this seems a little wonky. I just drew 4 scribbles or sort of zones. I want you to picture what I'm describing here. I'm describing either a market that is unwilling or unable to choose one side of the VWAP or the other. I'm describing a market that has chosen one side of the VWAP, but it's unable to get out of the slow lane yet. This third variant, crossing the deviation band, is pretty rare. It's not common that we're going to be oscillating along the deviation band. We tend to pick one side or the other. And so that's why I think people focus more on being entirely in the slow or in the fast lane. However, it's worth acknowledging that there are going to be these moments where we're not sure which side of the deviation band or which side of the VWAP we belong on. And these are the most dangerous for a trader because we haven't picked an effective lane to live in or to belong in yet. And these can obviously develop sequentially. So you would imagine maybe there's a market going absolutely sideways that slowly transitions up into the upper slow lane. That doesn't mean it's, massively bullish yet. It's just that it's leaning or hinting bullish. As it breaks up and out of that, maybe a brief stage of threatening to cross or trying to cross, but it should quickly then either get into the fast lane or remain in the slow lane. And as the name implies, right, a lane divider helps us to make sense of that otherwise kind of chaotic market because it gives us a framework within which to operate.